I'm on the foundation of SUI. Even if I wasn't, it's one of the most interesting technologies. It's one of the most incredible group of people who built the entire Move protocol, whilst at Facebook, the largest Web2 network in the world, to scale for the entire Web2 world. If that does not make you sit up and pay attention, I don't know what will. Now, it's kind of moving in line with alts. It's not showing its trend yet, but it's very early. It only launched about a year ago. So there's a lot going on in the space. Follow it on Twitter, make your own mind up. It's firmly on my radar screen, and not because I'm on the foundation. I actually do also think that it's going to be part of the next bull run.
Raoul Pal sees two crypto ecosystems as frontrunners in the fight for control of the cryptocurrency market. His quest was to find the next Solana, just like the huge rise of Solana. He identified two main contenders: the development of smart contracts on Move-based blockchains and the use of cross-chain fungibility via Cosmos Atom. Sui and Aptos are the two leaders of the Move blockchain ecosystem, while Celestia is a new project based on the Cosmos SDK that is also worth waiting for. Paul mentioned that Sui and Aptos represent the Move protocol, but have other unique features and use cases. After Sui and Aptos, Cosmos with Celestia and others offered quite strong competition. Avalanche may be a contender, but for now, it seems to be lagging behind in terms of adoption. According to Raoul Pal, this one coin, might become the next Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana.
So where are we in markets right now? We're just in the boring zone. I posted this on Twitter. The boring zone is that post-halving transition from crypto spring to crypto summer, where everything just chops around for a bit. Those of you who are over trading get chopped around. You're like, oh my God, this is the worst thing ever. The market's gone down and then it's gone back up. I don't want to chase this and I want to chase that. And oh my God, just stop doing that. It's just to own your major tokens. You've got some stuff in speculative stuff. Stop trading. Just stop trading. And you can then sit there and go to Spain for 3 weeks and not care what the market does, because over time, because of the adoption effects of the technology, you'll do well. So the boring zone finishes at some point, and then we transition to the banana zone, which is the full crypto summer and crypto fall. Now, those of you who get confused because you don't follow along properly and don't listen, these are not the actual seasons. These are the crypto seasons. So each year is a different season. It's not, oh, it's transitioning to fall because it's September or October. No, you're not listening. Fall is 2025 at some point. Is tomorrow more digital than today? Yes. Is liquidity coming? Yes. Are we seeing liquidity happening? Yes. And I'll come on to the liquidity in a sec. Those of you who are also invested in technology, tech's having a correction. Finally, I mean, the markets have not had a 2% fall. I've been super long tech. My liquidity analysis from Global Macro Investor and Real Vision Pro Macro got me into tech at the absolute low, which was amazing. That back in 2022, and I've been long ever since. I actually took profits in the semis at the height of the day. That doesn't normally happen. I'm not a guru. I don't play one on the internet. Took profits. I'll probably get back in at some point, because obviously that whole thesis is going to continue to play out. The whole AI thesis, everything else keeps working until the business cycle and liquidity go. So right now, we got a few wobbles. Dollar yen blowing up. Dollar yen is a carry trade for hedge funds, so that unwinds other things. And so we've had a bit of that. It's noise. It's all noise. And so you're going to get opportunities to put some trades on that you might have missed. Tesla will be one. Maybe you get a chance at Nvidia. I think it probably corrects a bit further, takes a bit longer. But these kind of things, these are the opportunities. If you've got a longer term time horizon, you go, oh, thank you.
He predicts a rapidly growing banana zone for cryptocurrencies, provides an overview of the banana zone and its everything code framework, which provides a comprehensive understanding of how global liquidity cycles determine asset prices, particularly in the technology and financial sectors. According to Paul, the everything code is a conceptual framework that suggests that the business cycle repeats itself as liquidity increases to depreciate the currency and pay debt renewals. This cyclical phenomenon has been observed since the 2008 global financial crisis, when central banks reset interest payments and initiated a new debt maturity cycle every 3 to 4 years. He says the macroeconomic summer and fall are all about increasing liquidity, with liquidity expected to increase through the end of 2025. Furthermore, growth assets like technology and cryptocurrencies tend to perform exceptionally well during these periods due to their adoption-driven secular trends. Due to its outer performance, the cryptocurrency banana zone is considerably stronger than the overly broad tech summer and bust. However, assets such as tech stocks and cryptocurrencies are doing well during this time. Paul believes that the rapid adoption and competitive potential of cryptocurrencies will lead to exponential market capitalization. He predicts that in 2 weeks the banana zone will arrive, triggering exponential growth and chaotic events. The banana zone, where asset prices skyrocket, begins with liquidity growth during the macroeconomic summer. Paul warns that market conditions may change even if the repeating cycle of everything code predicts this transformation. Investors can expect strong corrections or prolonged sideways movements. Paul predicted that the total market capitalization of the crypto industry could grow from $2.5 trillion to $100 trillion in less than a decade. The financial expert revealed that if the market maintains a steady growth rate and continues to evolve at a rapid pace, its market cap could increase by up to 44 times. Assets such as cryptocurrencies and technology perform extremely well during secular adoption-driven trends. He noted that this growth rate was twice as fast as internet adoption when comparing active wallets and IP addresses. The analyst based his $100 trillion market cap on the adoption rate of the cryptocurrency industry, emphasizing that the growing number of cryptocurrency users will have a massive impact on market value. Paul advised against taking unnecessary investment risks when investing in cryptocurrencies. The goal should be to maximize investment opportunities without getting dragged into tribal or philosophical debates. He emphasized that since the cryptocurrency market could reach a market capitalization of $100 trillion, there's no need to take excessive investment risks. Instead, investors should balance risks and opportunities using appropriate portfolio management strategies to effectively capture the majority of market gains. Paul predicted that the current market liquidity cycle could extend into 2025. Since 2008, there has been a noticeable cyclicity in global liquidity, delving into the nuances of what he calls the everything code. Paul revealed that the growth of market assets such as stocks, cryptocurrencies, and technology largely determines the current market cycle. He noted that the market is moving towards a macro summer, marked by increasing liquidity and often associated with the banana zone. According to Paul, the banana patch is a period of significant upward price movements where market indicators turn bullish, signaling the start of a new bullish period. The financial expert also noted that the global liquidity cycle tends to have a predictable pattern influencing economic activities. He highlighted several factors that could also impact the cryptocurrency market cycle, including the upcoming U.S. presidential election and a possible rate cut by the Federal Reserve. We have some swings right now. The dollar-yen is exploding, and the dollar-yen is a carry trade for hedge funds, which is causing other things to disappear. We've had a bit of that. It's noise. Everything is noise. So you'll have opportunities to make trades that you may have missed, and Tesla will be one of them. Financial conditions lead to liquidity. But when the dollar starts to weaken and interest rates start to fall a little bit, it's about bond yields, not Fed funds. We expect financial conditions to continue to ease. Think of this as a consolidation, a boring zone, and a sideways pattern. What we should see is the next peak and financial conditions, meaning liquidity, should follow. This is almost always the case. All our clues indicate that liquidity needs to be increased. If you remember, liquidity is related to refinancing debt. We have about $10 trillion to refinance over the next year. We are going to have to inject liquidity. We will have to reduce rates and bond yields. All of this will have to be done.